Welcome to the Legacy Leaders Podcast. Are you doing the best for your client to help them create their legacy? Are you creating a plan that goes far beyond finances to help people ensure that it becomes the driving force behind all decisions? On this podcast, hosts Katie Beth Hand and Stan Miller will help you with growing your practice and your clients' peace of mind. Together, they bring the best and brightest minds to share with you how to help your clients develop their best legacy. And now, here are your hosts, Katie Beth and Stan.
Welcome back to the Legacy Leaders Podcast with your hosts, Stan Miller and Katie Beth Hand. Our guest today is CPA, author, and the founder of Tax Goddess Business Services, Shauna the Tax Goddess. Shauna, thank you so much for joining us. We are really excited to have you on the show.
Oh, thanks so much for having me. I absolutely love talking about my favorite subjects, so I'm excited.
Perfect. Well, let's dive right in. Tell our listeners a little bit about your background and then what really led you to found your own company. Sort of what was your background? What got you interested in being a CPA? And then what led you to decide to start the Tax Goddess Business Services?
Absolutely. So if you don't mind, I'm actually going to start with the end in mind here. For those of you, I don't know if you guys can see me or just hear me, I am a redhead. Redheads and authority don't tend to go well together. So as far as how did we form a firm, that's where it really started. Now, backing way up. So I actually started in astrophysics of all things and was originally going to work for JPL. That was my dream job, was to go work for JPL. And very long story short, my mother, who is my goddess, got a notice from the IRS. How dare they? And I was sitting across the kitchen table from her. This was almost 23 years ago now, a very long time ago, sitting across the kitchen table from her when she got this notice. And my mother is German. I've got a big, long, terrible last name that is German, very hard to pronounce. My mother is very stoic, very composed, right? Gets this notice, breathes, puts the notice down on the table, pushes back from the table. And of course, as her daughter, are you okay? What's going on? What's happening? Well, I got a notice from the IRS. They want more money. I have a CPA and I have a tax attorney, but nobody can help me figure out how to reduce the tax burden. Ding, ding, right? Step in, astrophysicist daughter who's decently good at numbers, right? That's kind of smart. Maybe I can figure this out. So after now it's been 25 years that I have been studying, specializing, focusing more and more and more on tax strategy. The book that we just published last year, The 6% Life, my mom is now a proud 6% Life member, meaning that our client's tax rate is 6% on average or less. So when we look at tax strategy, really coming from the standpoint of there are CPAs, which we love, and we need you guys as CPAs, right? You file tax returns, you bring the good basic strategies, right? Get the kids on payroll, buy a new car, set up a 401k plan. As a tax strategist, we work with the financial advisors, with the CPAs to come up with the much more in-depth, in detail tax strategies that can take someone from the 37% all the way down to the 6%, all legal and above board, of course. So
That's fantastic. I love that. Stan, I can see questions brewing. You go ahead, and then I'll steal the next one.
Oh, we could have a really great long conversation about this. And I know I've been on your website and I see that you have a long list. You don't list your strategies, but you say that you have like 1,500 different things that you do. I'm really curious, without asking you to give up too much, what are 2 or 3 of your really serious go-to strategies? Because to move a client from 30-something% down to 6%, that's more than a nominal number, right? So what are 2 or 3 things that are the go-tos that help you get them there?
love it. So I want to preface this just by saying a couple of little things here. Okay, there's 2 main things that we need when we work with a client. The first one is the client's participation. So we can tell you what strategies to do, but if you don't actually do them, that's going to cause problems, right? So I can't get you from 35, 45. The highest right now is 63% in the state of California. I can't get you from 63 to 6 without the client actually participating. So that's always step number 1. Step number 2, in our world, we use something called the aggression scale. So 0 to 10, 0 meaning the IRS never calls you never ever except for a random audit, and 10 meaning we're all going to jail. Different clients, right? That look is Dan. I'm not going to jail. Red and orange don't look it together, so no jail time on this end. Okay. So every single client has their own aggression scale, and that aggression scale can be different between husband and wife. It can be different if both are W-2s, if one is a business owner. There's a lot of factors that kind of play into a person's choice of aggression scale. Now, level 10 is we're all going to jail. Level 9 is doing Al Capone, right? We're doing shady stuff, hoping we don't get caught. And a level 8 is as far as tax goddess will push the envelope. So all legal, all above board. You might get a telephone call from the IRS, you might get an audit, but all the T's are crossed, all the I's are dotted, you have all the paperwork. So knowing where the client wants to sit is super important to saying which strategies a specific client should use. So you're right, we look at a little over 1,500 strategies and we pile strategy on top of strategy on top of strategy to bring it down from that 63% all the way down to 6%. Now, I think my top 3, if I had to pick top 3, I'm going to give you a wide variety here, Stan, because they come from all over the different areas. So number 1, captive insurance. Okay. Now, captive insurance is currently sitting on the IRS's dirty dozen list. Well, wait a second, Shauna, I thought you said we're only doing legal above board. 100%. And I'm sure some of your listeners have run into this. You have the good kind of captive and you have the bad kind of captive, just like good strategies and bad strategies. Okay. The strategy itself is legal, above board, black and white in the tax code. Millions of companies across the US use it. But if you use it for bad purposes, you're going to get bad outcomes. So let me give you a perfect example. One of the most famous court cases, there was a cattle rancher who decided that he was going to set up a captive for his ranch. All of his head of cattle were on top of a mesa. So big mountain, flat on top. Okay. He bought flood insurance inside his captive. Mesas don't typically flood. And that particular mesa hadn't flooded in over 500 years. So when the IRS came and said, well, we're not quite so sure about this insurance, prove to us how this is a real risk, he couldn't do it, he got in trouble. So captives are amazing, but you have to be insuring real risk. Now, often with captives can write off up to 15% of gross income. So if your net profit margin is less than or equal to 15%, you might be able to wipe out your entire profit and get your tax rate to 0 in a single move. So some of these can be really, really big. Any questions on the first one?
No, I've been involved in captives before. I've been a little bit reluctant recently because they are on the IRS Dirty Dozen list, and so then you have to deal with, are you really prepared to put up with having the largest, most powerful government in the history of humankind on the other side of the table, by the way, with all the time and all the money, all the resources they would ever need to do battle with you. And that is a sobering thought as you contemplate a strategy like that.
100%. And this is why, at least in my opinion, it's so important that you're looking at, one, are my risks real, right? People get sold into buying flood insurance on top of a mesa. Don't do that. You already know you're going to get in trouble for that. Don't do that one, right? But let me give you a different case. We had 2 clients during COVID that had captives. One of them was a roofing manufacturer, right? So we put the roofs on top of big warehouses like Amazon, okay? They couldn't get nails, like hammer nails, because of the supply chain issues. His captive paid out a real risk during COVID. His captive was approved by the IRS. Yeah. We had a second client that does catering for the Major League Baseball teams. He bought $600,000 worth of food on February 15th. 2 weeks, right? Katie's holding up her lips going, are you kidding me? Right? Now, he had regular insurance, right? He went to his insurance carrier and said, okay, I've been paying you for 20 years for exactly this reason. They came back and said, act of God. He was almost out 600,000, but we had set up a captive a couple of years ahead of time. Captive was approved. So again, I think where people run into problems with the IRS with these captives, one, they go with maybe a vendor or a provider of the captive that is doing not so good things, right? Not above board kind of things. And you get sucked into the whirlpool, even if you're doing okay things. And the second one is getting sold into policies that really don't apply in your situation. So.
Some great example stories.
Yeah, following up on captives, though, let me just ask you, what's your take on buying life insurance inside a captive?
Oh, I love it. It depends. Why is the captive buying the life insurance? Okay. So internal to the captive, of course, the money goes in. The captive's job is to make sure that there's enough cash to pay out for any kind of issue, right? Any kind of insurance claim. So where we've run into problems is people buying captive with 90% of the liquid funds of the captive. Okay, how is the captive going to pay out on a claim with that? That's going to run into an issue. Okay. Whose life is the insurance being purchased on? Okay, so is it being purchased on the owner of the company, which I'm sure you then have a policy on specifically for if the owner dies, I have a key policy in place. And so we're buying life insurance on that specific life to be able to pay out that specific policy. It's a lot stronger of an argument versus if you're buying life insurance maybe on a 5-year-old, maybe it gives you a really long time there to build up some assets, but how liquid is it? How much cash value do I have in the first year? So I think these questions are the types of questions that, one, if you are not a specialist in tax strategy, please, 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 audience, do not just go work with somebody who knows Bob, the next door neighbor that can sell you a captive. Okay, that always breaks my heart when I see that. Make sure you're working with somebody that actually knows what's going on, knows how to use the systems. And of course, number two, your real risks.
Okay, so captives, that's a good start. So
Yeah.
we have time for a couple more, and I'm dying to hear what they are.
Love it. Let's do it. So the next question in my mind comes down to the family. Now, what does the family want? Okay, so when we ask our clients, all right, are you trying to build an empire? Okay, you're trying to build the next Rome. You want your assets to double every generation. Okay, so are we doing the Rockefeller thing? What a Kennedy thing? What are we doing? Are we going to be using ILETs? Are we going to talk about life insurance? Are we going to be using ILETs? Are we going to mandate that the ILET buys the next insurance on the next generation? Okay, are you more focused on real estate? Okay, insurance is great. Life insurance is a fantastic tool, but it's a lot more passive. And so for people that are not really wanting to be active and really involved, the life insurance is a great way to do it. You can, of course, borrow that money out to double dip on the money. What if you want to go the real estate route? Okay, you want to buy apartment complexes. Okay, we're all kind of sitting around biting our nails going, are we ready for the next crash or not? What's happening right now? What are we going to be doing? And so if you're really into real estate, let's look at how the family structure, so between trusts, between family limited partnerships, and of course, between using the real estate professional status between a husband and wife, that combination, if you've got one person with a really good business pumping out cash and the other person actually meets the qualifications for real estate professional and or short-term Airbnb rentals, how can we minimize all of the taxes using that combination? So when I talk about using the family, I mean not only the specific industry that you as a family want to focus on investing or diversifying into, but also using the members of the family, right? So can we put the kids on the payroll? So instead of having to pay their college out of pocket, we can pay their college costs using payroll. Can we start building up life insurance for the little ones when they're 5 years old, right? To really get them to that $1 million of assets when they hit 35, 45 to be able to borrow against to open their own businesses. Can we create family, I don't want to say this, we call them family corporations. What we mean is different people within the same family doing all of the different features and functions that you would need to run multiple businesses. So somebody is an insurance person, somebody's a financial planner, somebody's an attorney, somebody is the CPA, somebody runs the businesses, somebody is the real estate professional. How can we use the family playing along together to be able to minimize the taxes across the entire group?
Genius.
passive.
Another great strategy. All right, give us at least one more. You can't leave us hanging there, Shauna.
Okay, I love it. Do you want my favorite one? I have
Yes.
two. I have two favorite ones,
Yes.
but they're little. My favorites?
Yes.
Okay.
Yes.
Okay. Now, these are not big ones. Some of them are, one's tiny, but let me back up. Okay. I have 5 dogs. Okay. I have a Cane Corso, 2 German Shepherds, and 2 Boxers. They are very expensive. Right. With that, especially with the Cane Corso, she eats a horse pretty much every week. Right. This dog is huge and I love her and she's great. Okay. For most people, they're spending personal money on things that they love. Gardening, playing tennis, a yacht. Okay. For me, it's my dogs. I love my dogs, right? I take them with me. They go all the way. How can I legally write off areas where I am spending money for my business? Because in order to get a deduction, whatever the expense is has to be ordinary, necessary, and reasonable, right? Those 3 things. Those are the IRS keys: ordinary, necessary, and reasonable. Now, I have clients that come to my home. I have vendors that come to my home. I have client information at my location. It is my job as a CPA to protect that information, right?
Right.
Sure. Yes.
Yes. I see where you're headed. Go on.
I'm pretty sure no one is going to make it through a Cane Corso, 2 German Shepherds, and 2 Boxers to get anywhere near any of that client information. Now, there's a very famous court case, and this is really, we're looking at the personal budget. What are you spending money on that you can make a business deduction? Okay. There's a specific court case that says if the dog is trained, sit, stay, come. Okay. If the dog's shoulder is taller than the height of the owner's knee, which my Cane Corso definitely, my Germans definitely, my Boxers definitely, big long legs, right? And the third one is they have to have a business purpose. Security. Sounds about right. So when we look at, one of the most common questions we get is, Shauna, I want to write off my dogs. I want to write off my gardening habit. I want to write off the yacht. I want to write off the Rolex. I want to write off whatever it is that people are spending money on. Okay. How do we ensure that expense is ordinary, necessary, and reasonable for your business? So another famous story in my world, a client came in before he even told us his name, picked up the phone. I said, hey, how's it going? He said, yep, I want to write off $1 million yacht. It's been my dream since I was 5. Do you know how to do it? Yes, we do. Created a chartering company, had his business, paid the other business for tickets on the charter. Lots of ways to skin the cat. But if you remember, it all comes back to, we can tell you what to do. You got to actually do what we tell you to do. So when we look at tax strategy, it's not only that the world is an open oyster, assuming you have a business, right? Got to have a business, but you have to be willing to do the work. And that's really where we see most people say, you know what, I don't really want to get down to a 6%. I'm happy at a 20%. What are the big, easy, low-hanging fruit that I can just sign a piece of paper and save my 20%?
So, Sean, I really appreciate your passion about this. And one of the things that I read about you in your bio is you talk about, you have a name, the way you describe yourself. I think you said a profit first accountant. And I think I know what you're going to say to this, because all of us at various times have said, CPAs traditionally seem to drive by looking in the rearview mirror. So you only get information at a point in time when it's too late to actually do anything about it. It's just a matter of
100%.
reporting what you've already done, and you've already crossed the line. So it's too late to do anything to change it. So tell me how is your process different from that kind of traditional CPA model?
Absolutely. Yeah, you hit a huge nail on the head here, right? We can only make changes to what's going to happen to your tax bill ahead of the tax bill actually existing. So if you wait to make any changes until after December 31st, there are still a couple of strategies, maybe 3, 4, 5 of them, but they tend to be very small. They tend to be very limited. Maybe you can do them, maybe you can't. Right. So if you really want to focus on getting your tax rate down, you've got to be making changes during the year. And the biggest question that we receive is, well, Shauna, when should I start that? January 1st, December 31st of the previous year, right? Being later in the summertime, you're losing runway. Every single day that goes by, you're losing runway. And so at some point, typically, for example, we talked about captives. The shortest I've ever seen one set up was about 2 to 3 weeks. So if you call on December 25th, what are you going to do, right? You need timeline to actually be able to get these things done. And I think the biggest piece, the biggest difference between the CPA reporting historically and a tax strategist looking forward is, one, we want to know who you are, what you want to do, where you want to go, what is the focus of what you're trying to achieve, right? Building empires, buying real estate, whatever it is, okay? So we need to know those things sooner rather than later. And you hit on profit first. One of the rules that we mandate for any client that works with us, we want to see a minimum of 20% of gross revenue put into a profit first account that is specifically and only meant for tax strategy. Because with some of these tax strategies like captives, yes, you can finance them, but they work a whole heck of a lot better if you can just stroke a check on December 25th or whatever it is. So
That's awesome. I do have a couple more questions if we've not worn you out too much. So I've been looking through your website, coming through it, love your passion and the strategies and just how creative you are with everything. I think that it's just, it almost makes talking about taxes fun, which is not something you can typically say. So tell us a little bit about, for our listeners, what type of client are you best suited to serve? Are there certain, obviously business owners are one thing we've hit on a lot. What is your kind of ideal client coming in the door? Are there people you're not well suited to serve?
absolutely. So, and thank you so much for asking, because no matter how much I want to help everybody, unfortunately, even the goddess has to sleep. So we do appreciate that question very much. So yeah, it really, when you start to look at tax strategy, so just to give you an idea, the range for writing a tax strategy plan, the average is somewhere between $60,000 and $80,000. Okay. Now, we are looking for people that are paying at least $100,000 in tax. We want to be able to save you more than we cost you. Okay. Now, the awesome thing about a tax plan is that once you've written it, it's typically good 3, 5, 7, 10 years, unless you're doing something else. We had one guy that said he wanted to be a real estate professional, 3 years in, sold all of his real estate, moved to Belize and bought 3 ice cream shops. Slightly different plan, okay? So typically good for multiple years. And really what we're looking for is, so take home taxable income, $1 million or more, paying taxes of at least $100,000. And the third key here is you've got to want it, right? So again, we can tell you what to do, but if you don't do it, you're not going to see the savings. So you got to be willing to put in a little bit of work. So
That is a perfect answer to that question, and I love it. It always scares me anytime I talk to anybody that is in the professional industry and says they're a do-it-all person, because that's rarely ever true, that every client that walks through the door is one that they're suited to serve. So I love that. Before we run out of time, though, I do want to switch tracks for just a second, because you mentioned it earlier, but we haven't really had a chance to dive in. I do want to talk about your book, The 6% Life. So for our listeners, the book is written by the tax goddess. It's called The 6% Life. You can find it on her website or on Amazon, and it is 7 legal tax loopholes that any business owner can use to design their life and pay the government 6% or less. So just from the title alone, I feel like ears are pricking up. But tell us a little bit about what our listeners can expect from reading your book.
absolutely. So earlier we talked about a little bit the difference between a CPA and a tax strategist. And just to give you guys some numbers, most people don't even know. According to Google, there are 665,000 CPAs in the US. CPAs do all sorts of things, right? Controllers, CFOs, they are tax preparers, auditors, they do all sorts of things. When you start to specialize in tax strategy, right, there are 60,000 that have a master's in tax, just like me. There are 607 what are called certified tax coaches. So we start to kind of go up that pyramid of specialty, specialty, specialty. 607 that actually do tax strategy specifically as a focus. There are only 15 in the entire country, including myself, that are what are called certified tax strategists. So we are the top of the top of the top of the top, right, of this pyramid. And the major reason that I bring this up is that when somebody talks about tax strategy, Generally, they say, oh, yeah, well, my CPA is looking at that. My CPA is handling that. Your CPA is looking at the low-hanging fruit. And that's why I wrote the book, The 6% Life. Okay. A lot of business owners, a lot of people just don't know what they don't know. They don't know that these things even exist. And I'm never upset with my CPAs because my CPAs are busy. They're filing tax returns, they're doing your bookkeeping, they're following up. Like, they don't have time to read every single court case. The IRS releases three times a day, releases new court cases of what's changed, what's closed, what's updated, all the things. So if you don't have that team, the CPA to file the returns and the strategist to tell you what to do before the year is over to get the best outcome on your tax returns, you are leaving yourself in a hole, and most people just don't even know it. So wrote the book specifically to show some of the low-hanging fruit that if your CPA is not bringing to you, time to start looking for a pair, right? Time to start finding somebody who specializes in tax strategy to bring you at a minimum what we consider the low-hanging fruit, the basics. So
Perfect. That is a great answer. Before we run out of time, is there anything else you would like for our listeners to know?
you hit earlier on Profit First, and only because I'm so excited about it. There is actually a new app. It should be launching in the iOS store here mid-September called Cash Goblin. We've created it. It is specifically for Profit First. If you are looking for an automated way to handle your money to make sure that you always have enough cash to do strategy and pay whatever 6% in taxes are left, check it out. We'd love to have you.
That is awesome. Okay, very cool. Well, for all of our listeners, we want to thank you guys for joining us again. This has been the Legacy Leaders Podcast with your hosts, Stan Miller and Katie Beth Hand. Our guest today was Shauna the Tax Goddess. And to connect with Shauna and learn more about what she does, you can visit taxgoddess.com. You can also find her book, The 6% Life, on Amazon, and be sure to check out the Cash Goblin app coming in September of 2024. Shauna, thank you so much for joining us. This was a pleasure.
Thanks so much for having me. Way too much fun.
You've been listening to the Legacy Leaders Podcast with Katie Beth Hand and Stan Miller. For more information on them and the show, please visit pinnaclelegacylaw.com. If you like what you've learned today, do share the program with your friends and subscribe wherever podcasts are found.